Good evening, everyone, and welcome to ShrewDO Media. And I'm Shubham Thakur, founder of ShrewDO Media. And today we have a very special guest joining, Mr. J. Prakash Gupta, who is the founder of Dhan. Thank you so much, sir, for joining us.
It's, it's my pleasure, Shubham, to be on your show.
Thank you so much, sir. So today, me and sir are going to discuss on the topic financial literacy and money management for startups and in your 20s, because this topic is really going on boom, and still there are so many things we are going to figure out in this particular session. So here we go. So, sir, I'll just start by asking my first question is that what is financial literacy and its importance in India? Yes, sir.
Shubham, to start with, financial literacy is something, which helps you understand how to understand your own finances, right? So
Yes, sir.
there are people who are literate, but we can't say that all literate people are financially literate.
Yes, sir.
So for a country like India, it makes the importance is even more because we have a huge population, right?
Yes,
So
sir.
most of the people, even if they become qualified, they start working. There are people who are below the poverty line. So the challenge in India was they don't have a proper banking account, right? The other
Yes, sir.
challenge is they don't understand how to manage their own finances. So the traditionally it has always been like if you have money, you put it in land or you buy gold. So the people don't
Exactly.
understand that the world is beyond that.
Yeah.
And the more financial literate you are, you start understanding how to allocate
Exactly.
your funds, which is a proper financial instrument to put your money in. So for a country like India, which is one of the youngest countries where more than 65% of the population is below 35 years of age,
Yeah.
and our schooling system doesn't teach finance, it doesn't teach personal
Yes, sir.
finance. So people have to learn it by doing trial and error. So they listen to a lot of advisors. They had bad experiences, and then they learn, this is the right way of making my investments. So for a
Yes,
country like India, it has got special importance because the more financial literate we are, that's better for the economy.
yes, sir, exactly. And so, in India, like mostly only, sir, very few amount of people invest in stocks as well. So there are so many sessions that's going on, so many discussions are going on how to, literate people financially, especially in India. So like the way of podcasting and all. So it's going ahead. And so I just like if you have to describe in brief, like if I ask you, like what are the basics of financial literacy so that anyone could like start immediately, like so like if I want to start my manage on finances, so what are the basics according to you should I like which I should keep in mind?
See, the very basic thing starts that you need to come mainstream by having a bank account, which
Okay.
is the most basic thing. So
Yes,
once
sir.
you have bank account, that your savings are parked somewhere.
Yes,
Okay,
sir.
the next what is important is for you to understand, what are your expenses versus how much you are earning in a month. Okay,
Yes, sir.
so people tend to develop this habit of savings, right? So India is always a saving dominant
Yeah.
country, where we still a majority of the population don't live their lives on credit cards. So
Exactly.
savings has always been in the part of our culture. So people know somehow what the say importance of savings, but to translate those savings into a right instrument, into right investments which can secure your future. So all these understanding comes when you start coming on the mainstream. And so very basic thing which you need to do to become a financial literate is understand your expenses, understand where your incomes are coming from, what are your savings. Then you can always look for a opportunity cost, whether keeping this money in my bank is getting 4% 5% on fixed deposits is worth it, or should I deploy this money to other financial assets which can give me a higher return. Again, understanding your basic finances also gives you a clarity on which age group you belong to, and
Yeah.
accordingly your risk taking appetite also you know defines how you want to deploy your savings into investments.
Yes, sir, exactly. And so there is a taboo going on, like from the past generation, from people. I get to hear from people a lot, like you shouldn't use credit card much, because afterwards it's very hard to manage that. And so there are so many things already going on in people's mind, and still people need to overcome from it. So according to you, where does India stands, like in terms of financial literacy, and how do you think that India can improve and grow? Because there are still if we have to apply this kind of financial literacy, then we have to first get out of this mental taboos and all. So what do you think about it?
Hmm. Uh, See, I think it's very difficult to get a number. I don't have that number handy with me. That what percentage of our
It's
population is
20
financially
27%.
literate.
Yeah,
Yeah. Okay. So 27%, but there's a huge scope, right? So
yeah,
if one less than one third of your population uh, is only understand finances, and out of that too only 4-5% understand stocks, right? So
yeah,
rest of the money goes into either in fixed deposits in banks, or in some kind of other instruments. So for a country like India, it's important that our financial literacy rate grows, because that helps you in getting your money and savings into the mainstream. So,
yeah,
and which also leads to a lot of product innovation. So there will be a lot of companies coming, who will be helping you in managing your finances. There
yeah,
will be a lot of insights which you will be getting, and it's better for the government and the economy as well, because if you start getting your money in the mainstream, deploying at right financial instruments, there is also a tax net which improves for the government. So it's
yeah.
a win-win situation for all. I think money lying in your I would say uh, any place in the form of cash, not coming into the mainstream, is not good for any kind of economy.
Yes, exactly. My next question is for that. We all know that in India there is a startup boom going on, because after Shark Tank, there are so many people, who got inspired from it, and they started all the even small businesses. They are just trying to do something new and trying like very coming up with very different and unique initiatives. So most of the startups are, they are getting a lot of funds. They are getting a good scale, but after some point, like at certain point, they are losing it, there are so many examples of that. But I just want you to know, I just want to know that how do you, how to do the money management for a startup, like at the early stage and even afterwards, because as even like I'm a startup, I didn't take any funding because I'm just bootstrapping. But still there are so many startups who have lot kind of funding, but they don't have that financial knowledge, so they are lacking of it. So sir, what do you think about that?
Um, See, as a country, we are in a very sweet spot, right? India is
Yeah,
one of the third best countries apart from US and China, where
yeah,
the entrepreneurship zeal is catching up. We have more
yeah,
than 100 unicorns
yeah,
at this point, which is, I think, the third largest if you leave US and China aside.
yeah,
So, having more entrepreneurs is always good for the economy.
yeah,
Having said that, uh, you know for any startup, there are two things which work. One is, everybody jumps into starting something, and they come up with a big idea. But for getting funding was pretty easier just a while back. So if you go 6 months in the past, things
yeah,
were different than what it is today, right?
exactly.
So see, getting money is one thing, or the most important thing for any startup is how to execute those things, right? So most of the new age entrepreneurs come with the fact that only raising money and burning it gives you a certain kind of addressable market, which is not the fact. You need to understand, and things would be bit challenging from here on, because the way the global economy is shaping up, there is rise in inflation, so money won't be available so easily. So it's better for anyone who wants to raise funds is to have a very clear roadmap. What
Yeah.
kind of product they want to bring in, what's the idea, what's the TAM for it, that is your total addressable market. And for
Exactly.
someone who has already raised funds, it's very important for you to be frugal, right? You need to spend the money cautiously. So it also depends on what's the end objective. If your end objective is to create some idea which that cannot be scaled beyond a point, and your whole objective to build certain startup is to get merged with a larger company, there you need to have a lot of tractions coming in. So there your spending gets justified to certain extent. But when you really want to build a business and for the long run, where then you need to take care of your revenue, you need to take care of your profitability. Just throwing away money just to acquire customers is never going to be a right strategy. So if you have money and that things are going to be tougher for next 6 months to 1 year, you
Yeah.
need to plan your spendings accordingly. You need to have a right money management in that case.
Yes, sir, exactly. That was some kind of insights I was looking for. So thank you so much for that. And like as you know, like there are like in India, 80% of the new startups owners or the founders are so below 30. So they lack a lot of skills about that as well. Okay, the startup money management and other finances is one thing. But if you talk about like a person, like if individual growth in finances, so a very big term comes up, which is personal finance. So, sir, what is personal finance for somebody who doesn't know about it, and like why is it important to do that, and and now more than ever?
See, Shubham, see, if you talk about finance, one is corporate finance, where you
Yeah,
manage the finance of an organization, right?
exactly.
And there is something which is a personal finance, which is related to an individual, right?
Yes,
So when you need to manage your personal finance, you need to ensure that how you are going to secure yourself, uh, for the unforeseen future. Or if you have dependents on you, how you can protect your dependents, in case there is something uncertain which happens in the future. Second is how you are managing your funds today, right? So people earn salaries, people earn certain amounts, and if they don't have a control on what kind of spending they are doing, you will always be living hand to mouth. Okay. And
exactly.
for people of your age, where that India is in such a sweet spot that next 10-20 years, there's tremendous growth which can happen. So if you start investing right, if you start saving money in a correct way, that means you are managing your own finances well. That means
Yeah.
when from your income, if you deduct your spendings and the rest amount you invest, and then what is left is your savings, then you are really managing. You are a good personal finance manager. And it's more important because there are a lot of opportunities which are going to come in coming days, right? Whether you want to get into uh, you want to have your own startup, you want to work somewhere. So for that, if you start doing right investments today, you are securing your future not only for yourself but also on dependents, whom you have in coming future.
Yes, exactly.
Yes.
That was about the personal finances. So one major questions like comes up, the people of our age is that like now we know like what is personal finance, but how to invest, to go ahead, because there are a lot of options, and still like being at such a very young age, we barely haven't have seen the market, and we have barely even experienced the market. So according to like where should we invest, and like what are the right investment options according to you? Like if we start now, like as let's say 20, 21 year old guy.
See, the best asset class for you to start is equities, right? Because
Okay.
you have your entire life left for you, right? So at least 40-50 years is your upside, where you can at least invest. You will be working by that time. So equity gives you a fantastic return. The more, the earlier you start, you will have more compounding benefit out of it. So just get into equities, because you will have a limited savings with you right now, or limited money to invest. With that
Yes,
money,
sir.
you cannot go and buy land, or you cannot go. So over a period of time, if you see, equity has always outperformed other asset classes, and for you, it's the perfect age to start. Uh, I would say, don't go by just putting a lump sum amount. You go in a systematic way. Either you find good stocks and keep on investing that month on month, or you identify good mutual funds, good schemes where you keep on investing money. So
Yeah,
develop that habit of investing from today, and
yeah.
in next 10 years, you will have your own life. You will be dictating your own terms.
Yes, sir. That's thank you so much for that. And so, like now, the more as you said about equity, so like stocks, mutual funds, and like even if there are like some, like there is a startup, as I told you, like a startup boom is going on. So if we can help people, and just take a 1% or 2% of equity, that would be much better if you say so, right?
See, at your age, it doesn't harm you by experimenting, right? If you
Yeah,
understand a business idea, because since you are already a founder now of a startup,
yeah, yes,
you
sir.
know the challenges, and if you see there is a good business proposition, and if they're willing to take, your funds and give you certain stake, I think it should always try it out. Because
Yes, sir.
that's what I told you, right? Had you been in your 50s, I would have a different recommendation for you. But since you are starting so young,
Yeah,
and people who are listening and who are of your age or less than 30 years of age, there's a
yeah.
time to experiment, because you have a future ahead of you. Even if you lose some, you will learn, and you will be a better investor in coming years.
Yes, sir. So that was it. And so these are the things we talked about, like how to manage finances and how to do the money management for startups and all. But now, what kind of mistakes should we avoid? Because sir, it is like it is important what to do, but it is more important what not to do. You know. So what mistakes should we avoid at the early stage for personal finances as well as in startups?
See, first is, don't over leverage.
Okay.
Okay, on anything, right? Or don't over leverage on, if you are having a position in equities, or if you want to invest. Don't over leverage on any kind of relationships which you want to build professionally and want to last
Yes.
it for years. uh, that's one, that's very important. Second very important thing is, when you are starting and you want to start on your own, right, have a very clean intent of what you want to do in life. you know you need to be ethical. That's very important. Don't get carried away by short term gains, because it looks uh, very, matlab, it looks very attractive, right? I'm
Yeah.
making a quick buck and moving out. So you have to build, because you have to build your credibility from day one. So apart from investing on the hard money, you also have to invest on relationships. You have to develop relationships, because there's relationships which you build today, and you nurture it over years, will take you miles ahead.
Yes, sir. So I'm going forward for the last question, and the advice which you gave about like being building relationship and having a proper network is really helpful because once money will not work, but relationship will.
Exactly.
So that is a very important point. And sir, I'm going with the last question is that like if you talk about India, so sir, how do you think that Indian economy will grow if people will be financially literate? Like let's suppose a situation that everyone is financially literate in India, and so why do India doesn't have that much of billionaires as compared to other countries? So what should we do so that this could happen?
See, we are catching up in that momentum, right? So
Yeah,
as I told you, I'm sounding a bit repetitive, but the kind of advantage which India has now, very few countries in the world has, right? We are the youngest country. We are our tech talent is one of the best in the world. We have the highest
yeah,
number of English speaking population. Every year we you know have almost 4 5 lakh engineers coming out of colleges. So you understand the kind of uh, manpower strength which we have, uh, the skilled manpower strength. And on top of it, if you add something, where people become financially literate, where people start understanding the importance of various other asset classes, various other avenues of investing, people will move away from buying gold and buying land, because that's not only the two asset classes which is there. So this will help lot of innovations coming in. It will improve government's revenues, because once you are in the mainstream, you will be contributing, you will be paying taxes. So that will help government also to develop better infrastructure and better ecosystem for you. So it's a win-win situation for everyone, and also for new entrepreneurs, new companies, where they can come up with some innovative ideas, right?
Yeah.
So that innovative ideas, in today's world, you need to be collaborative, right? If you have more number of people on your business, as a customer, right, your growth is much faster than at any point of time. So it's good for the economy, and government or regulators are taking lot of initiatives to ensure that we become one of the fastest growing digital economies, as well as a country which understands finances, which has a better understanding of personal finance. There are a lot of new initiatives being taken up. There are a lot of fintechs who are working on the financial inclusion side. So over a period of time, this will obviously have the snowballing effect. And
Yeah.
as I said, that 3 years back, we hardly had any unicorns in the country. Right now, we are sitting
Yes,
on
sir.
100 as a number, and the entrepreneur zeal has started catching up. The more young guys, they want to leave their job, they want to try their hand, and bringing a lot of innovative ideas uh, on the table. So it's good for the country, I believe.
Yes. So with that, I'm ending the session. So thank you so much. The session was very amazing and very insightful. And I bet people will take good learnings from you. And so thank you so much. I'm so honored to have you on my show. Thank you.
Thank you, Shubham. It's my pleasure. Thank you.
Thank you, sir.